is there a magic formula for building up wealth? Not really, but you can do some basics, and they'll probably work for everyone. This isn't financial advice, but it's just some things I've found to have worked. So I suppose it's initially you can look at what level you're at, and just assess, do you have any disposable income? So, if you don't have any disposable income now, you can't, yes, you can vote different ways, or you can move country, I suppose. But in the immediate term, you can't control, I suppose, like essential outgoings. So, if you need to have food, pay rent or pay a mortgage, pay electricity prices, what have you, there may be a little bit of wiggle room in there. Like, you can look for better deals potentially with electric prices, you can look for better mortgage rates, and it'd definitely be worth doing those. The same with buildings insurance, car insurance. You can look around and you can save a small amount of money, but ultimately you're going to be paying out for those things. If you need a car, you're going to be paying out for car insurance, you're going to be paying out for fuel or electric or what have you. So there's a limit really to how much you can reduce, and you can only go so far to where you're at the bare bones of what you need to survive, or even get to work, say car, or money for trains or what have you. So there's, you can only reduce so much. So you can reduce, you can look at, if you've got 3 subscription services at £10 a month, could you get away with just having one? And just pay £10 a month, you'd save the other £20, that's £240 a year. Could you put that £240 a year into an account, like if you're on very low income, there's some really good accounts that give some really good bonuses, like 50% bonuses in the UK, called Help to Save. So if you're on, there's different criteria, and I've got a different video on that, but I would definitely look at that if you're on a fairly low wage. But £240, if you can get that doubled, £480, and then if you could put that into something that will make you money. So yeah, if you've got a hobby that you can kind of translate into more income, then that kind of brings me on to my next point. But you could maybe use it there. You could just put it in an interest account. There's a lot of free ones about. £480 isn't going to get you massive amount of interest, but it'll get you some interest. And you can maybe look at investing, but obviously only really invest, I suppose, what you can potentially afford to lose. So if it's your kind of rainy day fund, then you probably shouldn't be investing with that. A rainy day fund's good to have easy access to, because if your car breaks, your boiler breaks, and you need some income, accessible money straight away, that's a really good starting point to be at. So if your baseline is no disposable income, to go to a place where you have £500, £1,000 as almost a buffer, rainy day fund in case of any kind of unexpected costs, then that's a good place to start, rather than trying to jump that and go on to investing. So that's kind of one side. But yeah, in terms of earning more money, I think you've got to look at things like, are you going to stay in your same job and just ask for a increase, or because effectively, if you earn enough money in your current job, you wouldn't be in the position of having no disposable income. So either you have to, either your outgoings are too high, you can bring them down, or you can look into, can you get more money doing your current job? And unfortunately, we're in a position, I suppose, where a lot of the pay increases are by going to different jobs. Maybe in the same sector, or more senior position with a different company or what have you. So it might be worth looking at those things. But I suppose take all those kind of decisions very seriously, especially if you're like a sole income earner or anything like that. So there's that side of earning more money in either the same job you've got now via an increase, or a similar job as in what you're trained in, but with a different company or different employer. Or you can, I suppose, you could have a second job or a side hustle to bring in money in another way, whether you do that on evenings and weekends, because again, making the jump from leaving a paying position to go to like a side hustle kind of is, I would say, very risky. Whereas if you've kind of built up something that you can wash people's cars every evening and every weekend, and it brings an income, if that could bring in enough income to let you get off your main job, then maybe look at it. But if it's just a bit of extra money, it won't necessarily replace your main job, but it could give you some disposable money to either put into training, put into savings, whatever it is you want to do with it, put into investing, put into this rainy day fund. But yeah, you've got to potentially look at increasing how much money you have to then, when you've got a bit of disposable money, then you can look at things like, can you do some training so then you get paid more in your current job? Can you do some training so then you're eligible to get a better paid job elsewhere? Can you, if something's going to sell, can you buy stock and then, whether it's like upcycling, and then, can you buy the equipment you need to resell something for a profit? You can put it into there, you can put it into, effectively no risk, cash ISA accounts that at the moment, with no fees, you can get 5% back. So, the more you can put in those, up to 20,000 a year, you can get 5%, or just over 5% back with multiple offerings. I'll give you that. So you could look at there, but I suppose in the long run, to make more than inflation, you tend to need to invest it, or go into something where you become a business owner, or you sell for something at a a profit where it can outpace inflation, I suppose. So yeah, lots of things to think about there. But if you want to start off, I would definitely initially look at getting in financial stability to start with, and then once you've achieved that, to maybe look at rainy day fund, and then start looking at other avenues of whether you just want to have it in investments, which I suppose are potentially relatively passive and potentially do very well when they're passive, whereas things like day trading, where you're constantly looking at and changing who you have stocks in or what have you, also that's fairly risky, like virtually gambling, which wouldn't be where I'd go down. But yeah, just some ideas. If you like the ideas, then let me know in the comments. Please like and subscribe, and I'll keep going with these. Thanks.